start ചെയ്താലോ?
I'm ready. Start ചെയ്യാൻ തോന്നുന്നു അല്ലേ? വെയിറ്റ് ചെയ്യുന്നോ?
5 മിനിറ്റ് ആയി, തുടങ്ങാം. നമുക്ക് ആവശ്യമുള്ളവരല്ലെങ്കിൽ റെക്കോർഡിംഗ് കണ്ടോ?
കേൾക്കുന്നില്ല.
There are 15 participants. We can start.
അതെ, തുടങ്ങിയല്ലോ. ഓക്കെ. എന്റെ വോയിസ് ക്ലിയർ ആണോ? ഞാനൊരു ഹോട്ടലിലാണ്, അതുകൊണ്ട് എനിക്കൊരു സംശയം.
It's very clear, very clear, very clear.
Okay.
Clear ആണ് നമുക്ക്, ക്ലിയർ.
ചെറിയ സംശയം, കഴിഞ്ഞ പ്രാവശ്യത്തെ റെക്കോർഡിംഗ് കിട്ടാൻ വല്ല വഴിയുണ്ടോ?
ഓൾറെഡി ബ്രാൻഡ് ചെയ്തോണ്ടിരിക്കുക. നമ്മൾ അത് റെക്കോർഡിംഗ് യൂട്യൂബിൽ അപ്ലോഡ് ചെയ്യാൻ വേണ്ടിട്ട് ബ്രാൻഡ് ചെയ്തോണ്ടിരിക്കുകയാണ്. അത് ബ്രാൻഡ് ചെയ്തതിന് ശേഷം അതിന്റെ ലിങ്ക് എല്ലാവർക്കും അയച്ചു തരും.
ഓക്കെ, താങ്ക് യു.
Okay, thank you for joining. And the screen share yet again. Sharing. Screen കാണാമെങ്കിൽ പറയും.
കാണാം.
Okay. കഴിഞ്ഞ സെഷൻ ആയിരുന്നു. Okay. So sorry, സെഷൻ 2 ആണ്. കട്ട് പേസ്റ്റിന്റെ പ്രശ്നം. So സെഷൻ 2 ഇന്നത്തെ. അപ്പൊ കഴിഞ്ഞ പ്രാവശ്യം നമ്മൾ ഒന്ന് ഓടിച്ചു നോക്കി. I mean, do we really need to have a what should I say, understanding or expertise in personal finance? And അത് ഇല്ലെങ്കിൽ എന്ത് സംഭവിക്കുന്നു? So for example, I don't know whether I gave my father's example. പുള്ളി ജീവിതത്തിൽ ഒരിക്കലും പേഴ്സണൽ ഫിനാൻസ് ഒന്നും ചെയ്തിട്ടില്ല. പുള്ളി ഒരു സർക്കാർ PSU-ലായിരുന്നു. പക്ഷെ he had a decent life. I mean, he didn't buy a BMW or build a big house and all, but he did still manage to educate both me and my brother and gave us decent life, and he also lived a decent life, right? But we are in the next, we started in the next or 2-3 levels higher. So അതുകൊണ്ട് we should be able to go even 1 or 2 more levels higher, right? So before we start, ഞാൻ ഇങ്ങനെ കുറെ കാര്യങ്ങൾ ഫോളോ ചെയ്യുന്നതാണ്, because he is very on the ground. Probably, sorry, this is Warren Buffett. He used to be the richest guy in the world for a decent amount of time, and he is one guy who made all his money with investing only. Where business he made all his money through investing only. And he says that his biggest what you call edge over others was because he got a very long time. Obviously you would have put something somewhere. Oh, okay. Then hold on, let me switch the.
It is clear to all of us. Okay, fine. So he started at the age of 9 or something, and he has been extremely successful, obviously. അങ്ങനെ ഒരു 2-3 quote ഞാൻ I mean, I just want to share with you. Number 1, പലരും പല ഇൻവെസ്റ്റ്മെന്റും പറയുന്നത് ഭയങ്കര റിസ്കിയാണ്. ആൻഡ് ക്ലാസിക്കലി ഇന്നലെ പോലെ എൻ്റെ ഒരു ഫ്രണ്ടിനോട് ഞാൻ സംസാരിക്കുകയായിരുന്നു. I have given that case study also. 50 lakhs വാങ്ങിക്കുന്നവൻ, he is still damn scared of getting into equity market. അപ്പോ പുള്ളി എന്നെ വിളിച്ച് പറഞ്ഞു, you advise me, where should I put? So I simply tell, no, I cannot do that. കാരണം ഇപ്പൊ ഞാൻ പറയാം, tomorrow, day after tomorrow, after 1 week, something will change, right? And I may forget, you may forget, or I may not be even there. Then what will you do? So bare minimum അറിയില്ലെങ്കിൽ you do better don't get into that. പിന്നെ കാരണം വേറെ പോയി അവർ വേറെ ഉപദേശിക്കും, it will be in a mess. So risk comes from not knowing what you are doing. If you as long as you know what you are doing, you are perfectly fine. ഇത് കുറച്ച് തമാശ പോലെ തോന്നും, but most of the people I have seen who has lost money will be doing this thing. So I mean, എൻ്റെ വേറെ ഫ്രണ്ട് ഉണ്ട്, he has taken some bonds at 15.6% annualized interest, 14.7% and all. Now ഒരു bond already default ചെയ്തു. They are not paying the interest. Anyway, they are not paying the principal also now. The company has gone on insolvency, case of nothing is going to happen. They are already shut down the company. Other company, they are paying the interest, but they are not able to pay back the principal, right? So when you are when you're putting your money somewhere, you should understand why they are giving higher returns. And generally in debt fund, the higher the return, the risk is higher. It's a very simple rule. Higher, 10% കൂടുതലൊക്കെ ആരെങ്കിലും തരികയാണെന്ന് പറഞ്ഞാൽ think 100 times before even you put your money anywhere, right? Last one is the most important. ഞാൻ ഇത് മാത്രം ഒന്ന് കാണിക്കണം എന്ന് വിചാരിച്ചത്, പക്ഷേ then I saw this opportunity to overthrow me. This is what happened to me. എൻ്റെ personal is invest on yourself, right? That is a very, very important one. എങ്ങനെ ഇൻവെസ്റ്റ് ചെയ്യുന്നുള്ളത്, there is no certain, particular rule, whether you spend time by yourself, go and learn, listen to video, or watch videos, buy books, or go with people who understand this, all those things. But this is the most important, because ഞാൻ ഒരു കാലത്ത് വിചാരിച്ച ഒരു 10 കൊല്ലമൊക്കെ if you have expertise, you are done, you don't need to learn more. But what I'm realizing is world is changing so fast. Almost every year some 3-4 completely new things comes, and if you are not covered on the basics of your risk, you will be in big trouble. And I don't remember whether I told about Silicon Valley Bank last week. Silicon Valley Bank didn't do anything wrong. അവർ വാങ്ങിച്ചത് 60%-70% US ഗവൺമെന്റിന്റെ ബോണ്ടാണ്. ജസ്റ്റ് ബിക്കോസ് ബോണ്ടിൽ there is something called interest rate risk and liquidity risk. അത് രണ്ടും അടിച്ചു. They lost almost 25% of their money because of that. ആ 25% പോയതും ഇൻവെസ്റ്റേഴ്സിന് മനസ്സിലായി. They started withdrawing, and that is a bank run, right? That is a disaster. And these are how will I say? These are basics in debt investing. If you are investing in an instrument which is fixed income, ഈ ബോണ്ട് പോലെയൊക്കെ ആണെങ്കിൽ ഇതിന്റെ ബേസിക് ആണ്. You should never ever get into either one of those risks. 3 റിസ്കേ ഉള്ളൂ, അതിൽ 2 അവിടെ അടിച്ചു. So very basic. Get a high school kind of a understanding of where you are putting your money, what is the risk involved in, and what will happen if that risk happens. See, many a times when risk happens also, you will not lose your money. But when panic strikes, if you are also doing the same thing as what the others are doing, you will actually lose the money. Otherwise, it will be a notional loss. So, an example, I think, again, I would have told that during COVID, I kind of notionally lost 25% of my lifelong earnings, right? 3 option ഉണ്ടായിരുന്നു. ഒന്ന്, I could have exited everything. Second one was I would have just stayed put. Third one was I could have added more. ഏത് വാറൻ ബഫറ്റ് തന്നെ ഒരു quote ഉണ്ട്, when others are greedy, be fearful. When others are fearful, be greedy, right? So ഇത് വായിക്കാനും കേൾക്കാനൊക്കെ ഭയങ്കര രസമാണ്. But when everybody was fearful and running away, ഞാൻ ആദ്യമൊക്കെ ഭയങ്കര ധൈര്യത്തിൽ പോയിട്ട് I put some small amount of money at that time, and further it started going down. ഞാനൊരു 4-5 അറ്റംപ്റ്റ് ചെയ്തു. അത് കഴിഞ്ഞ് നോക്കുമ്പോൾ മാർക്കറ്റ് പിന്നെയും താഴോട്ട് ഇങ്ങനെ പോയിക്കൊണ്ടേയിരിക്കുകയാണ്. Then I also got fearful. Luckily ഞാൻ വിട്ടില്ല. I just left it there. I just left it there, and eventually ഇന്ന് നോക്കുകയാണെങ്കിൽ it turned out to be a better decision than selling off, right? But it's very hard to follow. Extremely hard to follow, and these kind of things happen once in 15 years, 20 years, 25 years. I mean, this is not doesn't happen every year. So ഇതെല്ലാം ഒരു 2008 ശേഷം അടുത്ത നടന്ന 2020-ലാണ്. അതിന് മുന്നേ നടന്ന 2001-ലാണ്. So the economic cycles will keep happening. But for example, ഇപ്പൊ നമ്മളൊരു 3 കൊല്ലം മുന്നേ ഇൻവെസ്റ്റ് ചെയ്യാൻ തുടങ്ങിയ ഒരാളുടെ അടുത്ത് ചോദിച്ചാൽ they will be thinking investing is very simple. Whatever I have put in the last 3 years, it has all grown, right? Because it has only gone one way up. So when the next bigger strike happens, only people will learn. So you have to give time to that also. Now, ഇത് ഞാൻ കഴിഞ്ഞ പ്രാവശ്യം കാണിച്ചു. I'm just repeating it, saying just a reallocation of your assets itself will significantly change the wealth what you create. And we will talk more about that today. എങ്ങനെയാണ് reallocation? Is it so simple that you can just go and reallocate? No, absolutely not. The risks involved are very different. So what that means is, if you are in a 47% equity from almost 11%, you go to 47%, selling off your 30% of your real estate, which is not productive today, you can retire today. If you do part of it, you can do after 3 years, and if you are not doing anything, you have to wait for 10 years to be safe in a retirement, right? Now, this is a number I just worked out to give a real life feeling of how things look like. So ഈ 5 ബാർ എന്ന് പറയുന്നത് 10 year, 20 year, 30 year, 40 year, 50 yearൽ ഇത്രയും ശതമാനം റിട്ടേണിലാണ് നമ്മൾ ഇടുന്നതെങ്കിൽ എത്ര പൈസ ഉണ്ടാവുന്നതാണ് ഇതിന്റെ. So I have 3 separate charts, and I will explain one by one. So why 5.36? I took an 8% return. That's what most of the people do in FD and all. Maybe 7 or 8. I took 8, a very optimistic number. I assume that the person is in 30% tax bracket. If the person is not in tax bracket, still better. But either 30% tax bracket. That's why I got a interest rate of 5.36, right? If you put it for 10 years, 10 lakh rupee will become 20 lakh. If you put it for 20 years, 10 lakh will become 30 lakh. Or these are all crores, because the numbers will become bigger and bigger. 30 year around 0.6 crores, 60 lakhs. 40 year around 80 lakhs. And in 50 years, it will become 1.4 crore. Now let me take the other extreme. 15% return, right? This is the 5.3. This is the same graph because this graph is so big, it is looking like almost zero. Everything is looking like zero, right? So I've taken 5.36 to 15%. 15% is difficult to get. Consistent 15% return is not that easy. But my personal experiences, my stock portfolio gives more than 15%. So it's not impossible to achieve. There are people who achieve 18, 19% also who are very specialized. So let us not go to that. 15% is not impossible to achieve. It is a little sophistication is required. So if you look at after 50 years, you are at 108 crores. What you are seeing here, 1.4 crores, and look at this number, 108 crores, right? This is the difference it will bring in when you are investing for a longer period at a higher interest rate. Now, I uploaded everything. I have blown up the second one with all the possibilities. 5.36, 8%, 10%, 12%, 15%. In my mutual fund portfolio, I am running at 12%. So that's also not impossible. And it has debt also. It's equity debt too. So it's a combination. So I'm doing around 12%. Right? So it's all possible. It's not rocket science. Not that I'm just taking from a book and telling the story, right? So if somebody is completely sitting in FD, even after 30, 40, 50 years, where you'll make like 80 lakhs, 1 crore, etc., the numbers will exponentially go up to 28, 30 lakhs to maybe even 100 crores also. So this is the impact both the numbers will make. One is obviously the number of years what you're putting in. So typically, I thought for us, the relevant numbers will be somewhere between 30 to 40 years. Mostly somebody in the 40s to 50s, they have enough time. I mean, as I said, we probably will live till, if the guys will live till 85 and ladies may live till 90 or so. And yesterday I was reading another article where they're saying today's kids will definitely live till 100 kind of stuff. So we have another 30 to 40 years life expectancy in front of us. So we are going to be somewhere here, right? Either here or here. So this is a whole difference it makes in a returns perspective. I have only talked about returns till now. Now, then why not just go and put everything in the highest return, right? Just go and put here 15% everywhere. Let me put anything in each and everything in 15%, right? It doesn't work that way because the risk obviously in 15% are higher than what you see in other places. That doesn't mean it cannot be mitigated. So how can we do that, right? So for example, we are doing I took a very simple example. If you're traveling from one place to other place, or starting and ending. So this is the image I got. So we are starting from one place, going to another place. What we want is to reach there safely at the fastest and without much of tension, saying somebody will steal something, somebody will come and hit me, all those kind of stuff. So we want to reach the fastest, safest, or safety first, then speed second, and then with peace of mind, right? That's what we generally do. Whether we think about it, whether we analyze it too much and all, I don't think so. But intuitively we do that, right? So what do I do if I want to go from say, Bangalore to Chennai? I will walk from my apartment wherever it is. I will take another vehicle, maybe a cycle, it may be a two-wheeler, it may be a four-wheeler. I go to the nearest airport, railway station, bus stand, whatever it is, and then I'll deboard in airport or wherever it is. I'll take another vehicle and I will reach that destination, right? So that is how we normally do this. This is exactly like the investment journey also. We need different instruments to handle different kind of goals or timelines, all those things, right? Obviously, we can't bring a flight to our home, which may be very fast to think so, but we can't bring a flight to our home or a train to our home. So we have to fix that last mile with whatever best way we can do. Now, always for me in investment, safety is the first one. Because if I'm alive only, there is a meaning in investing. If I'm not alive, then there's no meaning in investing at all, right? So I will ensure that whichever instrument I'm taking, whether it is a debt instrument, whether it's a equity instrument or gold or whatever it is, I am taking the least risk possible or manageable risk possible. There is nothing called zero risk nowhere. So there is always a risk involved, but a manageable risk. What is the risk involved? And if it happens, for example, COVID, I said I notionally lost 25% of money, but I was prepared for it. Even though mentally I was prepared, it was a big shocker. I never thought it will happen in my life, but it didn't impact me on my daily expenses or anything short term. Nothing impacted for me. So you have to think of safety first in all the aspects. No? Now, last time we saw emergency fund and insurance are the number one. We have to be 100%, preferably more than 100% covered in that. If that is not there, it's as good as driving 200 kilometers per hour in India, it is only a matter of time before that risk will hit us very, very bad. Each time we are getting into any instrument, any decision we are making, we are getting into a car, put your seatbelt, check for the airbags, tire pressure, headlights, clean windshield, whatever it is, do bare minimum check. It may take you half a minute or 30 seconds kind of thing, but please do bare minimum checks, and you should know what checks to do. I mean, we all do this regularly. I mean, it's not that when we do a journey, we all do this very, very naturally, very automatically and all, but people don't do this. And somebody told me, if somebody wants to buy a TV, they do sometimes weeks and months of research, going into OLED, QLED, inches, resolution, wattage, what is the next, can I upgrade it to next level, all those things, finally, price, Amazon made it's 100 rupees cheaper, 500 rupees cheaper, all those things, right? And takes days, weeks, sometimes even months, whereas the investment decision people make over second. Oh, so my friend did, okay, tell me where to log in, this is a link I will click, done, right? So that is how a lot of people do investment, which is absolutely not the right way to do. And remember, peace of mind is very important, and a lot of people don't talk about this. So as I told you earlier, my friend, he is damn scared of stock market. So that is one of the reasons why I never have told him where to put his money also, because the moment I tell him and he puts some money in the stock market, I don't think he's going to sleep. He will be worried about that money 24/7. And until he can figure out what the risk he's taking and that risk is manageable to him, I'm not going to tell him where to put that money. I mean, we have been speaking for almost a year now, and he's my friend. I did his first investment in 2018. I went to his desk, opened his laptop, and put it in liquid fund, which is a 100% or close to 100% safe debt instrument and all. But I never got him into an equity side as on today. So different goals. For example, I have an education goal for my children. I have a goal for buying a house. I have a goal for buying a car. All those goals over different period of time should have different instruments. For example, education goal is non-negotiable. I mean, we can't lose 1 or 2 years of our kid because our investment went wrong. Car is always negotiable. If the car gets delayed by 6 months or 1 year, it's okay. Or even if it gets delayed by 3 years, it's still okay. I can still manage, right? So, so depending on the goal, we should be extremely cautious on which instrument we are buying. And when I say instrument, I will come to that later. What is an instrument? Now, percentage of allocation is also very, very important, because a lot of people will say, I bought stock, I bought mutual fund, I bought X gold, etc., right? Now, I also see a lot of people buying 1 stock, 5 stock, 10 stock, and also saying I have bought stock. So there is no meaning in buying such things. So for example, if I go and buy 5 or 10 PCS, it's 3,000 rupees into 10 is 30,000 rupees. And for somebody who has a net worth of say 10 lakhs or 50 lakhs or maybe even above, $30,000 rupees will not make any difference either upside or downside. TCS becomes double after 1 year, nothing will happen. TCS becomes 0 after 1 year, nothing will happen. So percentage of allocation to each of these assets also very, very important. That you have to put it in such a way that neither it hurts you very badly if it goes down, nor it gives you a very high return when it goes up, right? So it has to be balanced. And we need to make our course correction. So I'll give you 2 of my examples. I bought a mutual fund after almost 4 or 5 years of research, and I held it on for 3.5 or 4 years. And it was one of the worst in the performance in the market. And I literally had to get out of it. I paid tax and I got out, right? So that is one thing. Then I bought in 2014, I started buying one debt fund. And I was so unlucky. I started buying. By the time I stopped buying, Modi government came in, they changed the tax rules. Means whatever they said is 1 year. Before that was 1 year, they made it 3 years. Now it was like catching a tiger's tail, in the sense, if I exit that at that time itself, I had to pay 30% tax because it was short term. But if I keep it for 3 years and then I exit, that I bought a short-term instrument. So it will not give me the best returns, right? So the longer I keep, my returns will keep coming down. And finally, I was exactly like catching a tiger's tail, where I could neither sell it nor keep it. And finally, around 2021, I started selling it. 2022, I closed everything. In fact, even today, after almost 18 months or so, I still not got back the taxes I paid to the government, right? You can imagine. So a huge amount, I redeem, I pay the tax, and for 18 months, I am still waiting for the tax to come back to my account. That means that the appreciation has been slower, right? So that this is a wrong thing what I did in 2014, which is still plaguing me in 2023. So you have to be very, very careful when you enter any instrument, because exiting it always costs you. Now, I talked a lot about risk, and I'll show you some of the pictures. Like, coincidentally, today when I was walking here, I saw a lady driving a scooter with 3 girls. Of course, they're kids, some like 5-6 years, all at less than 10 years and all. And when accident happens, when people get into serious trouble, it will come in newspaper. They all will blame them, saying that, oh, why did they do that? This is against rule, law, and all. But nobody seems to be following that for themselves, right? Autos, I don't know now in Kerala it is there, but when I was younger, this used to be very common. 15, 20 kids in an auto, right? And everybody will blame the auto driver when the accident happens. Till then, their own kid also will be going in similar thing, right? So this is an unseen part, right? Everybody is seeing that there is a problem there, but nobody speaks out. They actually do the wrong thing themselves. But when things go wrong, when somebody gets kind of punished for that, we don't learn from it. We just say, okay, that is that guy's problem, right? Now, this everybody will probably know. Cyrus Misri, one of the richest guy in India. Yeah, right. Just because he wore seatbelt in that accident, was sitting in the rear seat, probably one of the safest car in the world, but still he didn't survive. Can you hear me? I got a message that internet is not stable.
There was an interruption. Now it is okay.
Okay, fine. Okay, so it doesn't matter whether we are poor or rich or middle class and all. Doesn't matter unless we take our safety seriously. Things will hit us. It's like it is a statistics, right? Somebody will get impacted. If we are unlucky enough, we will get impacted. So in US, there's a data. This Dan Gilbert, he's a psychology professor in Harvard. He says in US, a lot of people get scared and drive in highway, and the number of deaths in that drive is more than the people who die in aircraft. I mean, traveling in aircraft. So it's very simple statistics. I'm scared. I don't fly. I drive, and the percentage of or per capita, if you take number of hours people driving versus number of hours people are flying, no more people die because they were just scared of taking the flight, right? So that news never comes out. In last year, 91 lakhs people died of hunger in the world. This is the whole world. This 91 people died. 28 lakhs people died of obesity, overweight. So how bad is overweight and how bad is overeating? And if you don't keep our weight, like this is, it's really bad. 28 lakhs people in the world is quite a big number, right? Last year, 1.5 lakh people died in road accident in India. It's a big number. People get surprised. But 13.5 lakh, 9 times of that died because they were consuming tobacco. People don't get worried with that. Of course, people will tell some advertisement and all. But this is 9 times more deadly than driving or riding on a road, right? In 2020, I don't know, some of you would have actually heard, the death in Kerala was less than 2019. So COVID year deaths were less than deaths in the previous year. The logic given was very few people were traveling outside and not really the accidental death. Accidental death is only 4,500 in Kerala. It is more because people were not traveling. They were not. Nothing was happening. Everybody was sitting at home. So lesser people died because of the lesser risk. That's the logic given. I'm not sure that's right. And finally, in Kerala, this is again Kerala data, 57% of the people who die out of 4,500 are either two-wheelers or pedestrians, right? So I always advise my friends, never drive a two-wheeler if you have a four-wheeler, right? I mean, you're in a high risk of getting into an accident or also even death. Whereas car or jeep constitutes 15%. So if you have a choice, take a car rather than walk out of this 57%, around 15 or 16% is walking, people, pedestrians. So if you think that walking is safer, no. In a major road, if you are walking, you are probably the second highest probability of getting an accident and even death, right? So the logic behind all these things is a lot of these things don't come in the newspaper. They don't give it enough importance. Because of that, what happens is we don't take this seriously. And these are the bigger numbers. These are all much bigger than this. So risk, always look at the unseen part, what people are not seeing. Now, I was telling this time you look at the assets, right? Overall assets, what all are there and all. So there should be one more. Okay, this is the slide. So there are only 4 assets what we have in the world in a broad category. One is real estate, very simple with no complication. It can be residential, it can be commercial, it can be agricultural, it can be, just say huge land with nothing kind of thing, right? That's a real estate. Now you can have stocks. Stocks is the next asset. The third one is what is called debt, which can be FD is a classical example of debt. It can be bonds. People normally say bonds. So Sriram Transport will issue a bond, and or even HDFC Bank, SBA, all of them issue bonds. And finally, there is commodities or gold or Bitcoin, arts, diamond. All those things come under one category called others. I have put it under this. You will see in different website categories. They will say, somebody will say commodity, somebody will say alternate assets, etc. But we are not going to get into this because this is a little complicated. Gold I will take, but other than that, other things are super complicated. So I'm not going to get into that at all. Now, I put a very simple chart for all these four kind of assets. X-axis, I have plotted the risk while carrying them. If you are buying it as an asset, Y-axis is the return what you will get. Now, if you take real estate, the bigger box or the rectangle shows more than majority of the time your risk and your returns will lie within this box. What I mean by that is maybe 60-70% of the time, if you buy a real estate, you will get the return somewhere slightly above inflation and definitely above zero. I mean, it's very rarely it will go below zero, right? But the arrows and the dot indicate the extremes it can go. For example, there are real estates where I have seen people getting 25, 30, 50, 100% returns. Very rare, but people do get that, right? There are real estates which give extraordinary returns. There are real estates which give negative returns. And I gave example last time. My friend's apartment is 2014 or 15 apartment. Today, it will not even give that price. So it's negative of negative, no interest, and original principal itself is negative. There are apartments or lands where your risk will be super high. I mean, I'll bring in some of those risks later on. I have one more slide on those things. And definitely there is some amount of risk. There are some, say for example, you buy in Bangalore and all, government or BDA sells plots. So if you get into the BDA plot, the risk involved is very low because you are buying from the government, but still there could be risk. Somebody will come and create some trouble, some bus stand will come nearby, so they will say, I want to widen the road, I will take away 2, 3 feet from you. Those kind of things, risk can come over there, right? Now, there are a lot of pros and cons. I will only talk top three in each one of these. Obviously, real estate, a lot of people feel emotional satisfaction, which is real. I mean, touch and feel, everybody knows that you own it, all those things. You can use it as a collateral. If you want to take a loan, whatever it is, you can use it as a collateral to use that. And you can be also converted into a regular income, like rental or agricultural or even commercial, all those kind of things, right? So that is the plus side of it. The con side is it's extremely high maintenance. If you look at all other asset classes, most of them are available in a digital format. And when it is digital, even if you are holding crores of rupees, the maintenance cost will be like 500 rupees or 1,000 rupees in a year. It will be very, 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 very minimal. But when you're owning a physical asset, you do have to do a lot of things. You have to do repair, painting, fencing, cleaning, taxes, all those kind of things. Liquidity will be very, very low for a real estate. Liquidity is, if you want to sell it today, how long will it take it to make it as a cash? That's the way liquidity is measured. It depends. If it is a highly demand area, you may get it in a few days or a few weeks. If it is not much of demand, you may wait for years together to sell it off, right? It may be very, very, very difficult to sell it off. Why liquidity is important? This is because of two reasons. One is if liquidity is low, your price also will be significantly lower. Second one is your time. There will be a time delay. In the sense, if you want to sell it off, you probably have to wait sometimes 1, 2, 3, sometimes even 5, 10 years or so, because there will be nobody to buy at the price what you want. Now, one other thing which I don't like in this industry is it still involves a significant amount of black money. And since it is done non-digital even today, a lot of black money is still involved. So, okay, that's fine. Now, jumping to equity, almost same. I mean, nothing is different, almost same. Average of return will be slightly higher than the real estate. So, and I will overlap this and show you towards the end how all the asset classes come together. This also has a lower risk if you choose the right kind of stocks. It also has infinite risk, and I'll show you the next chart will show you that. There are stocks which will give you enormous amount of return. For example, if you bought HDFC Bank 25 years back, it would have multiplied your money more than 20% every year, year after year after year after year, and you will be sitting in multiple crores today. So there are large companies which has given enormous amount of return. And obviously, there are enough companies which will give you negative and even zero return, not even zero. It will give you negative and would have wiped off the whole money itself, right? And definitely, even an average performance of a equity will mostly beat inflation. So that is one good thing to come. Now, good things of here, in my personal this thing, it's one of the cleanest asset you can own. Everything is transparent, buying, selling, everybody has visibility, buyer has visibility, seller has clean visibility. They can compare how much is somebody else selling. I will not buy more than that. I will not give premium, all those things. Government knows every transaction. Your form 26 AS will get filled with all the transactions as soon as possible. Before you file your tax, it will all come there. So 100% clean, you can pay your taxes, peace of mind, absolutely great. High liquidity, I mean, if you want to sell a stock, say TCS, or you take a Reliance and all, you want to sell a stock. If you go to the market, you will find 5 paisa, 10 paisa difference. That's it. The buyer and seller, there will be 5 to 10 paisa difference. It will not be more than that. Extremely high liquidity, so you can sell it at whatever price it's available in the market, right? And that is applicable mostly for the large cap and some mid caps. And I will explain that when you go to the stock, what is a large cap, small cap, mid cap, and all. If it is small cap, which is majority of the stocks, only 250 stocks in India are large and mid cap. Everything else, around 5,000 stocks are there. Everything else is small caps. Only these 250 are in the large and mid cap. They have high liquidity. Others don't have. Now, the third point, which is I have highlighted, the generally highest returns in the world. If you look at the last 20 years, also this asset class has given the highest return in the world. So it has given around 14% annualized in dollar terms, not in rupee terms. Rupee terms, you have to make it like 4 to 5% higher, maybe 14-15% or so. So it has given extremely high return compared to all other asset classes. Now, what are the cons? There is every possibility that you can lose everything. I mean, there is nobody can assure you can lose 100% of the capital. It can be highly volatile. I mean, never ever own this asset if you want that money back in the next 3 to 5 years or so. In short term, you have to slowly sell it off, move into a debt asset class category or whatever it is, and then start. Continue with the debt asset class. Never keep it for a shorter period of time. Then equities can perform very bad or reasonably bad for a very long time. I bought my Reliance in 2008. Till 2018, I was either in minus or in single digit, 1, 2, 3% kind of thing. Within 2 years, post-COVID, or 3 years, it went to like close to 14%, and today I am around 12% or so, right? 12% is nothing extraordinary, but from a 2% for 10 years and then jumping to 12% within the next 2 to 3 years, and all the percentage I'm telling are annualized for that many number of years. 12% means 12% for last 15 years, 12 into 12 into 12 into 12, whatever it is, right? So that can happen. So we have to be patient when you're buying. Again, be very careful. And once you have bought, you have to give enough time for it to perform. Now, I told you how risky this is, right? This is S-Bank chart. The blue line is the price of the stock. On 20th August 2008, it hit 394 rupees, right? After that, it has only seen one direction, it is downwards. On 29th July 2020, after almost 2 years, it fell 97%. In fact, I bought this somewhere around 100. I think somewhere this region I started buying. From 100, today it is at 13 or 14 rupees. So I am still holding that. And I lost 85% of my money, whatever I have put, right? So this is the kind of impact which can happen in a stock market. So you have to be super careful when even buying anything. So, I mean, red light, flash. So be very careful. Now, the third instrument is a debt instrument, which is, again, I keep telling, it's a proxy for FD kind of thing. But there are a lot of other things. There are bonds, debentures, a lot of things. But invariably, all of them work like a FD. The major difference between an FD and a debenture or a bond is others are tradable, because FD is given in my name. In the sense, if Mukundan goes to bank, FD will be given in Mukundan's name. Mukundan cannot go and trade it to somebody. I can't give it to somebody else and take the money. But all the debentures and bonds and all are tradable. The benefit with the bond is, suppose that I buy today, say for example, I bought, it's 11%, and after 1 year, the interest rates are down, and at that time the similar bonds are available for 8%. If I go and sell my bond, I will get a higher price. Not only that, I will get the interest, I will also get a higher price for what I bought. If I bought it for 100 rupees, somebody will be ready to buy it 105, 110 and all, right? So I will make double profit. Exactly opposite will happen if the interest rate goes up. So be careful, there's always a risk. So the debt instruments hardly give you inflation beating returns. Most of them give you below inflation beating returns. Some of them give you higher, but there's always limited. You won't find a debt instrument giving 20% return for say 20 years and all. If you're finding something in double digits, you should be really lucky, right? One important thing is there are debt instruments with almost zero risk. So there is Government of India bonds. It's called gilt funds. If you are buying Government of India bonds, it's available in mutual fund. If you buy gilt mutual fund, it's almost zero risk. Similarly, whatever you are putting in post office is mostly zero risk. Banks are not zero risk. Banks has only 5 lakh protection, but everything else, all directly RBI or Government of India bonds, all have zero risk. This also can give you negative return, and I can show you some example of where you will get negative return, because people basically default. Like I gave you earlier, if you buy a bond and the company goes bust and they can't return the money, then it gets into negative. And I also seen infinite risk with very few. But it is not like stock market that if you take 10 stock, 1 or 2 will have infinite risk. Here, if you take 100, probably 1 or 2 will have infinite risk. But definitely there are infinite risk. So we have to be careful. So if we blindly shoot on it, we may end up buying one of these and we may lose a lot of money. Right? So that is where debt is. Debt products, one of the simplest, absolutely no need of any education. Somebody will tell this is a percentage of interest you will get. You can just go it. Absolutely, you can buy it in small quantities. You can go 500 rupees, 1,000 rupees, all those things. So that's great. Absolutely no maintenance or extreme small maintenance, no cost to pay and all. But the cons is the major problem, because it hardly beats inflation. It doesn't. It hardly beats inflation. Right, and any capital lost here, unlike equity, any capital lost here is a permanent loss. You very likely will not get it back, so it is gone. And it is the least tax efficient instrument. It will, if you are in a 30% tax bracket, you have to pay 30%. There is nothing you can do. That's why I showed you that 5.36% interest for a longer period. It may be even less than 5%. If you are getting a 7% return on your debt instrument and 30% of tax is gone, 2.1, so you're at 4.8, 4.9 kind of thing, right? So this is a very low yielding instrument. Now, if you overlay all these things, this is how it will come. Real estate, as I said, it is riskier. Absolutely, in absolute terms, it is slightly more riskier than the equity. It returns maybe higher, but it's still much lower than equity average returns. Debt is lying here. It's also, what should I say? It's a decent instrument for few purposes, and we will come to that where we should use what kind of stuff. Right now, finally, gold. Gold comes somewhere here, and I don't need to explain too much. It can beat inflation, and I mean normal circumstances it can come somewhere near that. Its negative returns are generally capped. It won't go into infinite, but also the positive also generally capped. So if of course, the pros and cons, physical ownership is possible, high quality for security. I mean, you can put it as a collateral, you can get the loans, etc. Generally, it is supposed to be hedged against inflation. So when inflation goes up, gold prices also go up. This is also very poor tax. I mean, the cons are it's very poorly taxed. It's just like a debt instrument, 30% tax on whatever profit you are making. It can have very long period of underperformance. As I told you, from 1934 to 1973, almost 39 years, it was in negative territory. So it can have very long period of underperformance. Jewelry actually loses its value as soon as you buy, and depends on the ability or the seller. You can lose up to 2 to 3% sometimes, or you can even up to 15-20% as soon as you buy, because if you try to sell it back, they may give you a lesser amount. Now, this is the overall picture now. Debt, gold, equity, real estate, and this is, I put it as others, including bitcoins and alternate investments, paintings, all those things. They are supposed to give a higher return, but they also come with a super high risk. So, and most of us may not even have enough money to put it in. If you buy a painting, one painting may cost $500,000 or $1 million. So I don't think many of us in this call will have that much money to put it in. So I for the time being, we will request to ignore this part. These are the other 4 instruments, how from a risk versus return it performs, right? Now, to simplify how we as an investor will look at it, right? If I am an investor, I want something which is the highest return. Any given point of time, I want the highest return with zero risk. That's what I want. But generally, I end up somewhere here. I will take some amount of risk. I will not take too much, but I will end up taking some amount of risk. But invariably, I will get a return which is lesser than inflation. By doing simple things, whatever we are talking now, in the next few sessions, we will figure out what to do. By doing some simple things, we can go somewhere here. I mean, we will not go here, but we can be somewhere here, right? That's all we want to achieve, and this will be pretty good. This will be in the top 2, 3, 4 percentile of investors if you are here. That's all is our objective. And this is supporting that document. This is a study done by JP Morgan this year. They took, this is only US data, so it's not India data because it's very easy to get data in US. 20 years, 1999 to 2018. And exactly as I said, the inflation average was 2.2%, and average investor has got 1.9% returns, right? And these are various combinations, REITs. REITs is the real estate investment trust, gold, oil. This is S&P, one of the exchange index fund. This is 60% stock and 40% bond, 40% stock, 60% bond, then purely bond, all those kind of stuff, right? Home owning, all those things. So this is what we want to avoid. We don't want to get into this trap of an average investor who gets below inflation return. As long as we are somewhere here, we are good enough. I mean, so it's very hard to be here. And don't look at this asset class as so this will keep changing. I mean, every time you do a study, because gold would have done better in the last, say 2001 to 2012 or something, gold did extremely well. So that is why gold is coming here. If you take another after 5 years, this may come somewhere here, right? So it will keep rotating. The returns from asset classes will keep rotating. So, oh, sorry. Just hold on. Okay, hold on. I actually missed. Oh, okay, here. Okay, this I show, so that's not required. Okay, then I am actually done. I am good. So today, I have done on the stipulated time. So we can open up for questions, Sunil.
Thanks, Mukundan. ആർക്കെങ്കിലും എന്തെങ്കിലും ക്വസ്റ്റ്യൻസ് Q&A സെഷൻ നമുക്ക് ഓപ്പൺ ആക്കാം. അപ്പോൾ ആർക്കെങ്കിലും എന്തെങ്കിലും ക്ലാരിഫിക്കേഷൻസ് ഉണ്ടെങ്കിൽ, ക്വസ്റ്റ്യൻസ് ഉണ്ടെങ്കിൽ പ്ലീസ്.
ഇതിന് മൂന്നൻ ഒരു ഇത് പറഞ്ഞത് പിന്നെ ഡെപ്റ്റ് കേൾക്കുന്നുണ്ടോ ഞാൻ പറയുന്നത്? ഡെപ്റ്റിനെ കുറിച്ചാണ് എനിക്ക് കൂടുതൽ അറിയേണ്ടത്. ഡെപ്റ്റിനെ കുറിച്ച് നമ്മൾ അടുത്ത ക്ലാസ്സിൽ പറയാന്നാ പറഞ്ഞത്. പക്ഷെ ഇങ്ങനെ ഡെപ്റ്റ് നമ്മൾ ഇപ്പൊ ഇതിൽ കാണിച്ചത് പ്രകാരം ഇപ്പൊ പ്യുവർലി ഇപ്പൊ ഈ കാണിച്ചത് നോക്കുകയാണെങ്കിൽ ഡെപ്റ്റിൽ പോരുത് എന്നുള്ളതാണ്, ബിലോ ഇൻഫ്ലേഷൻ എന്നുള്ളതാണ്. ചില കേസസിൽ ഡെപ്റ്റ് എടുക്കാന്ന് പറഞ്ഞത് അല്ലെ, അതിനെ കുറിച്ച് അടുത്ത ക്ലാസ്സിൽ പറയും എന്നാണല്ലോ പറഞ്ഞത്. അപ്പൊ അതിനെ കുറിച്ച് ചോദ്യമില്ല,
നമുക്കിപ്പോ തന്നെ ഡിസ്കസ് ചെയ്യാം. സോ ഞാനത് ഫസ്റ്റ് ഒരു ഇൻട്രൊഡക്ഷൻ ഇതിലൊക്കെ ചെയ്തു. ഞാൻ ലെറ്റ് മീ ബ്രിങ് ദാറ്റ് ഇൻ, ഗിവ് മീ എ സെക്കൻഡ്. അതൊരു not here. See, all asset classes are like food we eat. And a simplification, the way I would tell is it's like the food we consume. We cannot just go and eat only carbohydrate and say, oh, we are great, we will do great, right? We need everything. We need protein, we need fat, we need minerals. So what is required for what? That I was, let me see if we can, where is that? Okay, here we go. See, all kind of see our what you call foods are designed very scientifically, right? Randomized this has everything in that when we eat a food. So debt is a very stable instrument. So I will give you one example. My friend's mother was diagnosed with cancer in 2007 or 7, I think. And being a middle class family, they said we will definitely treat. They went to doctor. Doctor said this is at stage 4, advanced. Hardly a month is what I'm giving. Please give her all whatever happiness you can give, and don't spend money because it will be waste of your money, right? They are a middle class like most of us. His brother was having a very normal job. My friend was in IT in Infosys, so he had got some stocks from Infosys, ESOPs. Father was in government, he is retired. So when they checked, they needed some 20-30 lakhs for treatment. So they decided we will do whatever possible. This guy went and sold all his Infosys stock, and Infosys stock was lowest in the last 4 or 5 years. So he got hit by the price. Second is he sold with something called fast sell. So the brokerage will take another 0.5% or 1% and give the money next day. So to cut the long story short, his mother passed away within a month. They spent 30 lakhs. And he literally became poorer like 60-70 lakhs because he sold that stock at the bottom. So the advice always is when your emergency fund and whatever money you need for the next, say, 3 to 5 years, like I said, whatever is non-negotiable things, right? Your children's education, you want to learn something or something very important in your life, that money should be in debt because there is a reasonable, less volatility and reasonable predictability. Anything else, you can move to a little higher risky kind of asset class. And unfortunately, if you look, for example, I gave my own father's advice. He was 100% debt, or he had some real estate, but a majority of his money was in debt. Of course, he got 6%, 7%, 8% and all. And one of the good or bad thing which used to happen is our previous generation, if you look at, debt used to give 12, 13, 14%. PPF and all used to give 12%, 13% because inflation at that time was 12, 13, 14%. So anyway, you are losing money so fast, and the government has given a higher interest rate in PPF and all because of that. Even the SBI may give 10% FD at that time, but inflation was in double digits, so it doesn't help. So debt is mandatory. For debt and one more asset class is mandatory. So ideally, the suggestion is put 1/3 in everything: real estate 1/3, or 30% equity, 30% debt, 30%, and 10% in gold or something. But that is just theory. It doesn't work well for everybody unless you know what you are doing. For example, if you look at Mukesh Ambani today, he will be 99% in equity. He owns 50% of Reliance. So he is $100 billion worth. So most of his money is in Reliance only. So he is a heavy equity guy, right? But even if he loses 100% of Reliance tomorrow, even if he has $1 billion in some debt, he can live his life aramse. He doesn't have to care. So the percentage of allocation and when you are moving the money from one asset class to other asset class depend on your goals, whatever goals you have in life at what time. That is very important.
മുകുന്ദൻ, ഈ ഫിക്സഡ് ഡെപ്പോസിറ്റിനെ പറ്റി ഒരു കാര്യം ചോദിച്ചിട്ടുണ്ട്. ഞാൻ 2-3 പ്രാവശ്യം കേട്ടു യുവർ ഇൻഷുറൻസ് ഓർ 5 ലക്ഷം രൂപയാണ് അതിന്റെ കവറേജ്, അതായത് ഇൻ കേസ് സംതിങ് ഹാപ്പൻസ് ടു ദാറ്റ് ബാങ്ക്. സോ മൈ ക്വസ്റ്റ്യൻ ഈസ്, ഇപ്പം ഒരു ബാങ്കിൽ ഇപ്പം 2-3 ഡെപ്പോസിറ്റ് ഉണ്ടെന്ന് വെച്ചോളൂ നിങ്ങൾക്ക്. അപ്പം ഈച്ച് ഡെപ്പോസിറ്റ് ഗെറ്റ്സ് 5 lakh കവറേജ്, ഓർ ജസ്റ്റ് ഓൺലി വൺ ബാങ്ക് യു വിൽ ഗെറ്റ് all your deposit you will get maximum 5 lakhs അങ്ങനെയാണോ?
രണ്ടാമത്തെ ഓപ്ഷൻ. If you are put to say 1 lakh, 2 lakh, 5 lakh, 10 lakh in ICICI Bank, even in different branches, you will only get 5 lakhs. But if you are put it in ICICI and HDFC and SBI, everywhere you will get 5 lakhs.
Okay. And അതിന്റെ റിസ്ക് എങ്ങനെയാണ്? ഇന്ത്യയിൽ നാഷണൽ ബാങ്ക് ഒക്കെ നാഷണലൈസ്ഡ് ബാങ്ക്സ് ഒക്കെ നല്ല കൺട്രോൾ അണ്ടർ റെഗുലേഷനിലല്ലേ? അപ്പൊ how risky is this FD?
Okay, good. So എന്റെ സ്ക്രീൻ കാണാമല്ലോ അല്ലേ?
കാണാം.
Okay, so this is some data on Indian banks going bust. Okay, actually ഇതിന്റെ മുന്നിലത്തെ സ്ലൈഡ് കാണിക്കാം. എവിടെ സ്ലൈഡ് ഹിഡൻ ആണെന്ന് തോന്നുന്നു. Let me see if I can show it. Yeah, this is the slide. So before RBI, I think RBI came in around 1960 or something. If you look at the previous record, in India, hundreds of banks used to go bust on a yearly basis. There are times where 900 banks have gone bust, right? But so that is only history. Good thing is that is only history. If you look now, there are banks which has gone bust. For example, IDBI almost Global Trust Bank actually went bust. Bank of Punjab boy, Centurion Bank boy, Times Bank, bank boy, Yes Bank almost went bust. But none of these banks depositors lost money because RBI took care of it. Either what they did was they were ahead of the game. The day, so for example, SBB Bank in the Friday evening, they actually closed the bank, saying that we can't run the bank, we are done. പിന്നെയാണ് ഫെഡും ട്രഷറി ഒക്കെ കൂടിയത്, അവർ വീക്കെൻഡിൽ കൂടി എന്തൊക്കെയോ ചെയ്ത് എങ്ങനെയോ അവർ ചെയ്തു. I mean, that is like after accident has happened, they did that first aid very quickly and took the patient to hospital and the patient survived. That is what they did. That's a very bad way of a regulator acting, right? Of course, they did something, but that's very bad. So RBI what generally does is, it's technically not correct, but what they generally do is they have very, very, very good monitoring systems in place. And they actually arm twist other banks to take over these banks. See, ഇവിടെ കാണുന്ന എല്ലാ mergerum, at least my understanding, all were forced mergers. None of these banks, OBC, Centurion Bank, HDFC Bank, ഒന്നും ഇവരെ ആവശ്യമില്ലായിരുന്നു. This is all liabilities for them. But just to ensure that people don't lose money, RBI forced them. See, a classical example on Yes Bank. Yes Bank actually closed on 2000. March. So what they did, they went to ICICI Bank and HDFC and they said, RBI said, put money. ICICI and HDFC was smart. They said, you put money first, then we will. so then RBI went to SBI, said, you put money, right? Then SBI put 60% of the money in S Bank. Then ICICI put, HDFC put, Kotak Bank put, then Axis, everybody put money. Of course, small amount, but all of them contributed. So because of that, the whole investor community was saved. But be careful. I am only talking. Your question was also nationalized banks or scheduled commercial bank. None of the other banks, including cooperative banks, are under RBI. So there are classical big cases of Punjab Maharashtra Cooperative Bank, where people's life-saving retirement money has lied there, and it has completely gone. So. National banks and scheduled commercial banks which are coming under RBI will give you that 5 lakhs. And generally, RBI is good to today's world. RBI is probably the best central banker in the world who follow this. Coincidentally, 2 days back when that monetary committee meeting was happening and they didn't increase the interest rate, this was a question asked to one of the deputy governors, asking if the SVB was in India, would it have gone bankrupt? They said no. We have the check, and we would have figured out months before that this is a risk, and we would have asked them to correct it.
Great. Thank you, Mohandan.
Said that it is, see, anything is possible, right? The risk is risk. I mean, it's very, very low probability, but there is always a risk.
Got it. Thank you.
Mohandan, ഒരു ക്വസ്റ്റ്യൻ ഉള്ളത്, ഈ ഡെറ്റ് സൈഡിൽ ഈ FD വേഴ്സസ് ബോണ്ട്സ്, റിയലി ഒരു ഡിസ്റ്റിങ്ഷൻ ആവശ്യമുണ്ടോ, അതോ ജനറലി ഡെറ്റ് വേണ്ട സമയത്ത് നമ്മൾ സേഫ്ലി FDയിലേക്ക് പോകുന്നതാണോ നല്ലത്, അതോ ബോണ്ട്സും കൂടെ നോക്കേണ്ട ആവശ്യമുണ്ടോ എന്നുള്ളതാണ് ആവശ്യം?
ഇന്ത്യയില് okay, generally let me give you a simple data. SBI has per capita basis നോക്കുകയാണെങ്കിൽ SBI mutual fundum SBI bank എടുക്കുകയാണെങ്കിൽ, so SBI bank has around 40 lakh crores of money they manage. SBI mutual fund manages around 6 lakh crores. So they're around 7 times bigger. SBI bank is around 7 times bigger. But if I look at a similar head count, right? SBI bank is 1,000 times bigger than mutual fund. In summary, that salary is paid by you and me only, whoever is putting FD, right? Those are the people who are paying salary for that. So bank by design is more considered to be safe and give money to the poor people, those kind of things. That has a cost involved in that. That is why you get a lower interest rate generally in bank. So today, if you go to the best of the scheduled banks, you may get around 7.75, 8 plus if you are a senior citizen. Otherwise, 7.75 is the best I know, right? If you go to a Shriram Transport today, they will give you 11%. A bond from Shriram Transport, which is a AA, decent security, all those kind of stuff. Now, the problem here is a common person investing, right? A common person cannot go and figure out if Shriram Transport is a good company, whether that will return my money when I want, what is the risk involved, can they go bankrupt? All these things a common man cannot figure it out. Other part is, in India, bond market is not mature like a stock market. Stock market, stock market probably in India, I would say it will come in the top, say 2%, 3% in the world. Maybe US and some European markets may compete with us. In transparency, in regulation, in disclosure, etc., it is super good. But bond market is not as mature as that. So you may find, DHFL, you remember the Diwan Housing? One day, the bond was degraded from the highest credit rating to the lowest credit rating. One day. So in India, the bond market is not that mature. So if you are very confident, you know the company very well, then you can get into a bond. Otherwise, I would say go through mutual funds, because mutual funds, what they will do is, instead of taking a bond, they will not buy Shriram Transport 100%. They will buy 100 or 120 Shriram Transport kind of companies and make it as a one thing. So, and then give you that unit, so that the risk of somebody going bankrupt or the credit risk coming up, still you lose only very minimal, 1%, 2%, 0.5% kind of. And they do enough homework because they have experts. They can sit and read every Shriram Transport's financial document and their assets and liabilities, all those things. And then they make the choice. So I was listening to ICICI guys. They said ICICI Mutual Fund in their history till date, they have never bought a bond which has defaulted. Never bought. They probably are existing for around 25 years or so, 20 plus years they are existing. So they have never bought a bond which has defaulted, right? So they do their job. And I'm not assuring anything. There may be some defaults in the future, but the probability of the default is very low. And even if it defaults, it may be very small amount. So I would strongly recommend, if you are buying debt, buy mutual funds rather than anything else. And now mutual funds, they have given this year onwards, complete debt is again fully taxable, but you can have a mix of a little bit of equity in that and then reduce the tax. So that is all that possibility is. That you will see later. It is a little complicated math. I don't know, did I answer your question?
Yeah,
or
definitely, you did. One question, follow-up question, debt market, overall debt, bond market, index fund in India.
In the Bharat ETF, index see, one of the major reasons for people moving into index is you cannot create additional alpha, or sorry, wrong technical words. You cannot give additional return with a mutual fund with a lower risk. That's why index fund like I mean, if a combination of higher returns and lower risk mutual index fund is not a good choice. That's why large cap index fund is good in India, but mid cap and small cap you can still find a lot of mutual funds which are outperforming the index, right? So India, as I said, bond market is still not mature, and I think it will take another 5-10 years to be mature. So in India there are enough, for example, the gilt fund if you take a last 10-year return, gilt funds are giving 9.5-10% return. Right, and that is in spite of last 1.5 year, 2-year return is 4.5%, because it did very well before that. So gilt fund has given 9.5% or 10, close to 10% for over a 10-year period. There is something called dynamic fund where they will keep changing the gilt AAA, cash, they keep changing that. That is giving more than 8%, 8.5%. So there are enough opportunities within debt market which are giving you pretty good return at a very low risk. So why do you want to get into a ETF or a index fund in that situation? You shouldn't. And as I said, if mottom index fund in India, I don't think there will be more than 10 or 15 debt index funds in India. Very few.
Thanks, Mohan.
Welcome.
Question, Nifty bees index fund, index
Nifty?
Nifty bees.
Nifty bees Nippon Reliance Nippon.
In the equity fund, debt fund.
That's Nifty or equity?
Equity.
നമുക്ക് ഇപ്പൊ തന്നെ കാണാം. ഞാൻ കാണിച്ചു തരാം, പെട്ടെന്ന് കണ്ടുപിടിക്കാൻ പറ്റും. ഇതിൽ ഒരുപാട് എന്താ പറയാ കോംപ്ലിക്കേഷൻ ഒന്നുമില്ല. വാല്യൂ റിസർച്ച് ഞാൻ പറഞ്ഞ വെബ്സൈറ്റിൽ പോവാ, വാല്യൂ റിസർച്ച് ഓൺലൈനുള്ള വെബ്സൈറ്റിൽ പോവാ, നിഫ്റ്റി ബീസ് നിപ്പോൺ ഇന്ത്യ ETF. ഞാൻ ബീസ് എന്തുകൊണ്ടാണ് നിപ്പോൺ എന്ന് പറഞ്ഞത്, ഈ ബീസ് ഇറക്കിയത് ഗോൾഡ്മാൻ സാക്സ് ആയിരുന്നു. അവരുടെ ഗോൾഡ് ബീസ് അവരുടെ ആയിരുന്നു. അത് പിന്നീട് അവര് റിലയൻസിന് വിറ്റു, അപ്പൊ അത് നിപ്പോണിനെ വിറ്റിരിക്കുകയാണ്. സോ ഇഫ് യു ഗോ ഹിയർ ദർ ഇസ് സംതിങ് കോൾഡ് പോർട്ട്ഫോളിയോ നോക്കി അത് എല്ലാം കാണാം. ഇതണ്ട, സോറി, ഇവിടെ താഴെ പോയാൽ സോറി, here it is, equity 99.89% is equity. ഒന്നുമില്ല.
ഇത് നമ്മൾ കഴിഞ്ഞ ആഴ്ച പറഞ്ഞതുപോലെ ഇതെന്ന് വെച്ചാൽ ഒരു ആവറേജിങ് ഔട്ടാണ് ഇത് അല്ലേ? മറ്റൊരു സിംഗിൾ ഇക്വിറ്റി വാങ്ങിക്കുന്നതിനേക്കാളും നിഫ്റ്റി ബീസ് എന്ന് പറയുമ്പോൾ കുറെ കൂടെ ഒരു ഫ്ലോട്ടിംഗ് ആയിരിക്കും.
അതെ. സി, ഇത് ആരും ബുദ്ധി ഉപയോഗിച്ച് ഡിസൈഡ് ചെയ്യുന്ന ഒരു ആക്റ്റീവ് ഫണ്ട് അല്ല.
ഓട്ടോമേറ്റഡ്.
അതെ, ഇന്ന് നിഫ്റ്റിയിൽ എന്താണോ വെയിറ്റേജും അതിന്റെ പ്രൈസ് അതിനനുസരിച്ച് ഡെയിലി അപ്ഡേറ്റ് ചെയ്യുന്നുണ്ട്. അപ്പോ ഇതിന്റെ ഗുണം എന്ന് പറഞ്ഞാൽ, സോ ഇഫ് യു ഗോ ടു എക്സ്പെൻസ് റേഷ്യോ കണ്ട 0.05, ഓൾമോസ്റ്റ് 0 ആണ്. അതിന്റെ എക്സ്പെൻസ് റേഷ്യോ എന്ന് പറയുന്നത് ഓൾമോസ്റ്റ് 0 ആണ്. അത്ര കാശേ കൊടുക്കുന്നുള്ളൂ. പക്ഷേ യു കൻ ഓൾസോ കമ്പയർ വിത്ത് പിയേഴ്സ്. ഫോർ എക്സാമ്പിൾ, ഇഫ് യു ലുക്ക് അറ്റ് ദ പെർഫോമൻസ്, ലെറ്റ് മീ ഷോ യു ദ റിട്ടേൺസ്. ഇപ്പൊ ഇത് കഴിഞ്ഞ ഒരു കൊല്ലം എടുക്കുകയാണെങ്കിൽ 135 ഫണ്ട് ഉണ്ട് ആ കാറ്റഗറി. ലാർജ് ക്യാപ്പും പിന്നെ എല്ലാ ETF-ഉം ഇൻഡെക്സ് ഫണ്ടൊക്കെ ലാർജ് ക്യാപ്പിൽ 135 ഉണ്ട്. അതില് ഇവര് 38ാമതാണ് പെർഫോമൻസ് വൈസ്, പ്യൂർലി പെർഫോമൻസ് വൈസ്. ഇപ്പൊ 3 കൊല്ലം എടുക്കുകയാണെങ്കിൽ 10ാമത്തെയാണ്, 5 കൊല്ലം എടുക്കുകയാണെങ്കിൽ 14ാമത്തെയാണ്, 9 കൊല്ലം എടുക്കാൻ 19ആണ്, 10 കൊല്ലം എടുക്കുകയാണെങ്കിൽ 18. ഇത് വളരെ നല്ല പെർഫോമൻസ് ആണ്. ഇത് സൂപ്പർ പെർഫോമൻസ്. ഐ മീൻ ഇത് ഞാൻ കഴിയുമ്പോൾ ഇതൊരു വളരെ ഹൈ വെയിറ്റേജ് കൊടുക്കുന്ന ഒരു ക്രൈറ്റീരിയൻ ആണ്. ഹൗ ആർ ദ പെർഫോമിംഗ് റിലേറ്റീവ്ലി. ഇത് ക്ലാസ്സിലെ ഒരു കൊച്ചിൻ റാങ്ക് പോലെയാണ്. ഓരോ ഇത് ഈക്വല്ല, ഇത് കഴിഞ്ഞ പോലെ, ഇത് അതിന് 2-3 കൊല്ലം മുന്നേ, അങ്ങനത്തെ അതുപോലെ വേണമെങ്കിൽ നോക്കാൻ നോക്കും. പിന്നെ റിസ്ക് നോക്കുമ്പോ ഇതാണ് ഏറ്റവും ബിഗ്ഗസ്റ്റ് ഫാക്ടർ റിസ്കില്. സ്റ്റാൻഡേർഡ് ഡീവിയേഷൻ ആണ് നോക്കുക. 16.5 ഇത് കാണിക്കുന്നത്. ലാർജ് ക്യാപിലൊക്കെ നോക്കുകയാണെങ്കിൽ കൂടുതലാണ്, 17 കൂടുതൽ. സോ അതുകൊണ്ടാണ് പറഞ്ഞത് ഇപ്പൊ ഇതിന്റെ റിസ്കും കുറവാണ്, റിട്ടേണും കൂടുതലാണ്. then why don't you take this?
റിട്ടേൺ എവിടെയാണ് കാണിക്കുന്നത്?
റിട്ടേൺ ഇതിലില്ല. റിട്ടേൺ നമ്മൾ ഇവിടെ അല്ല കാണിച്ചത്. റിട്ടേൺ ഞാൻ ഇതിന് മുന്നിൽ കാണിച്ചു. ഇതാണ് റിട്ടേൺ.
ഓക്കെ.
3 കൊല്ലം 30% കാണിക്കുന്നതിന്റെ പ്രശ്നം എന്ന് പറഞ്ഞാൽ കോവിഡ് കാരണം മാർക്കറ്റ് അപ്പോൾ ഭയങ്കര അടിച്ചിരിക്കുകയായിരുന്നു. അതുകൊണ്ടാണ് 30%. പക്ഷെ 5 കൊല്ലം 12.5, 7 കൊല്ലം 13.5. സോ ദിസ് ഷുഡ് ബി സംവെയർ ഇൻ ദിസ് 11 to 13-14% ആ റേഞ്ചിലായിരിക്കും.
നല്ല പെർസെന്റേജ് ഉണ്ട്.
ഇത് വളരെ നല്ല റിട്ടേൺ അല്ല. എനിത്തിങ് ഇൻ ഡബിൾ ഡിജിറ്റ്സ്. 11-12% ഉണ്ടാണ് വെരി ഗുഡ് റിട്ടേൺ ഇൻ.
ഓക്കെ.
നിഫ്റ്റി ആകുമ്പോൾ 50 ഉണ്ടാവും. ഇതിന്റെ പോർട്ട്ഫോളിയോ ഒക്കെ പോയാൽ കാണാം. കംപ്ലീറ്റ്ലി ഇവിടെ റിലയൻസ് 10.48, HDFC Bank 9.22, ICICI Bank 7.80, ഇൻഫോസിസ് 7.12 ഉള്ള എല്ലാ 50 എണ്ണത്തിലും ഉണ്ടാവും. പവർ ഗ്രിഡിലെ 0.9, ടാറ്റ മോട്ടോഴ്സ്. അതെ. സോ ഇത് മാൻഡേറ്ററി ആണ്. സെബിയുടെ മാൻഡേറ്റ് ആണ്. എല്ലാ മാസവും അവസാനം. ഇല്ല, നിഫ്റ്റിയിൽ അതാണ് ഇല്ല. നിഫ്റ്റി നെക്സ്റ്റ് 50-ലാണ് തന്നെ.
ഇൻഡെക്സ് ഫണ്ട്സ് ആകുമ്പോൾ എങ്ങനെയാണ് ഈ റാങ്കിങ്ങിൽ ഇത്ര ഡിഫറൻസ് ഉണ്ടാവുക? ഓൾമോസ്റ്റ് എല്ലാം ഈ പറഞ്ഞ പോലെ ഓട്ടോമാറ്റിക്കലി അലക്കേറ്റ് ചെയ്യുന്നതല്ല. അപ്പം ഇൻഡെക്സ് ഫണ്ട്സ് ഏത് മ്യൂച്വൽ ഫണ്ട് ഗ്രൂപ്പ് ഇറക്കുകയാണെങ്കിലും
ഓക്കെ. സോ 2 ചേഞ്ചസ് ഉണ്ടാവും. ഒന്ന്, ഓട്ടോമേറ്റഡ് എന്ന് പറഞ്ഞാലും ഓരോ ഇതിപ്പോ നിപ്പോണുകാരുടെ ഒരു ആൽഗരിതം ആയിരിക്കും റൺ ചെയ്യുക. ഫോർ എക്സാമ്പിൾ, നാളെ ഇവരുടെ റിലയൻസിന്റെ പ്രൈസ് 1% വീണെന്ന് വെച്ചു. ഇവർക്കൊരു ടൈമിലേ ഉണ്ട്. ദേ ഡോണ്ട് ഹാവ് ടു ഡു അഡ്ജസ്റ്റ്മെന്റ് ഇമ്മീഡിയറ്റ്ലി ഓൺ ദ സെയിം ഡേ. അവർക്കൊരു ടൈമിലേ ഉണ്ടാവും. ഒരു ദിവസം കൊണ്ടോ 2 ദിവസം കൊണ്ടോ ഒരാഴ്ച കൊണ്ടോ അത് അഡ്ജസ്റ്റ് ചെയ്യണമെന്നാണ്. സോ ഇവരുടെ ആൽഗരിതം ചിലപ്പോൾ സെയിം ഡേ കറക്റ്റ് ചെയ്യാം. ICICIയുടെ ആൽഗരിതം 2-ാം ദിവസം ചെയ്യാം. SBIയുടെ ആൽഗരിതം ഒരു 5-ാം ദിവസം ചെയ്യാം, 10-ാം ദിവസം ചെയ്യാം. So they will be given something called a error. Error. ഞാൻ പേര് പറഞ്ഞു. ഒരു എറർ ഉണ്ടാവും. You cannot 100% follow any index. So index is a benchmark. ഒരു ചെറിയ ലെവലിൽ മുകളിലും താഴെയും പോയിക്കൊണ്ടേയിരിക്കും. It will be 0.2, 0.3, 0.4%. That is one part of it. അപ്പൊ അതിൽ രണ്ടും സംഭവിക്കും. ഇപ്പോ ഒന്ന്, ഇപ്പൊ നാളെ റിലയൻസ് വീണപ്പോ HDFC ബാങ്ക് വിറ്റില്ല, ICICI വിറ്റു. മറ്റന്നാള് 1% കേറി. അപ്പൊ HDFC ബാങ്കിന് വിൽക്കേണ്ട ആവശ്യമില്ല, അവർ ട്രാൻസാക്ഷനും ചെയ്തില്ല. പക്ഷെ ICICI ബാങ്കിന് അത് വാങ്ങിക്കുകയും വേണം. അപ്പൊ ഒരു ട്രാൻസാക്ഷൻ ചെയ്തത് നഷ്ടത്തിലുമായി. റൈറ്റ്? This will be, even though it will be very minuscule, 0.1, 0.05 ഒക്കെ ആയിരിക്കെങ്കിലും എല്ലാ ദിവസവും ഇങ്ങനെ ട്രാൻസാക്ഷൻ ആകുമ്പോൾ അങ്ങനെ ഒരു എറർ കയറും. ഇതിനകത്ത് എറർ അല്ലേ? That is one. And as I said, the error can become positive also. But anything either side is supposed to be not good, because positive error കുറച്ചു കാലം വരാം, but then suddenly it can become negative. There is something wrong in the logic. That's why you are getting there, right? So that's ഒരു reason. രണ്ടാമത്തെ reason, expense ratio can be different. Expense ratio can go from 0.05 to 0.2, 0.3 ഒക്കെ പോവാം. അപ്പൊ expense ratio can be higher. So because of these two, there will be a small, എടുത്താൽ ഇതിലൊരു 1%, 2% ഡിഫറൻസ് ഒന്നും ഉണ്ടാവില്ല. ഏകദേശം ഒരു 0.2, 0.3, 0.4 ഡിഫറൻസ് അത്രയൊക്കെ വരുള്ളൂ. Not be significantly different.
Got it. Thank you.
ഇനി ആർക്കെങ്കിലും എന്തെങ്കിലും ക്വസ്റ്റ്യൻസ് ചോദിക്കാനുണ്ടോ? ഇല്ല എങ്കിൽ വി വിൽ വൈൻഡ് അപ്പ്. ജസ്റ്റ് ടു റിമൈൻഡ് യു, അടുത്ത സൺഡേ നമുക്ക് 3rd സെഷൻ ഉണ്ടാവും, ഇതിന്റെ തന്നെ കണ്ടിന്യൂഷൻ ആയിട്ടുള്ളത്. അപ്പോൾ പ്ലീസ് ഡോണ്ട് ഫോർഗെറ്റ്. അതുകൂടാതെ ബാക്കിയുള്ളവരെയും കൂടി ഇങ്ങനെയുള്ള ഒരു വണ്ടർഫുൾ ഓപ്പർച്യൂണിറ്റിയെ കുറിച്ച് ഒന്ന് നിങ്ങളുടെ ഇൻഫർമേഷൻ ഒന്ന് പാസ് ചെയ്യാൻ പറ്റുമെങ്കിൽ, നിങ്ങളുടെ എക്സ്പീരിയൻസും പാസ് ചെയ്യാൻ പറ്റുന്നുണ്ടെങ്കിൽ വളരെ നല്ലത്. കാരണം ദർശനയുടെ ഇങ്ങനെയുള്ള ഇനിഷ്യേറ്റീവിൽ മാക്സിമം ആൾക്കാർക്ക് അഡ്വാൻറ്റേജ് കിട്ടണം എന്നുള്ള ഒരു വ്യൂ ആണ് നമുക്കുള്ളത്. അപ്പൊ അതുകൊണ്ട് തീർച്ചയായിട്ടും അങ്ങനെ ഒരു മാക്സിമം പാർട്ടിസിപ്പേഷൻ ഉള്ള നമ്മുടെ ഭാഗത്തുനിന്ന് ഒരു ശ്രമം കൂടി ഉണ്ടായാൽ നല്ലതായിരിക്കും. സോ ദാറ്റ് വി ഓൾ ഗെറ്റ് ബെനിഫിറ്റഡ് ഫ്രം ദിസ് സെഷൻസ്. ഒരു 12 സെഷൻസ് ആണ് നമ്മൾ പ്ലാൻ ചെയ്തിട്ടുള്ളത്. അപ്പൊ അതില് ആദ്യത്തെ 2 സെഷനാണ് ഇപ്പൊ കഴിഞ്ഞിട്ടുള്ളത്. ഇനി 3ാമത്തെ സെഷൻ നെക്സ്റ്റ് സൺഡേ വി വിൽ ഡു ഇറ്റ്. അപ്പോ till such time, see you. പിന്നെ ഇന്നത്തെ പ്രസന്റേഷനും തീർച്ചയായിട്ടും നമ്മൾ ഷെയർ ചെയ്യാം. അതുകൂടാതെ ഇന്ന് ജോയിൻ ചെയ്തിട്ടുള്ള ആൾക്കാരെ കഴിയുന്നത്ര നമ്മുടെ ഒരു ഗ്രൂപ്പ് ഉണ്ട്, വാട്സപ്പ് ഗ്രൂപ്പ് ഉണ്ട്. അപ്പൊ ആ ഗ്രൂപ്പിലേക്ക് ആഡ് ചെയ്യാം. സോ ദാറ്റ് പ്രസന്റേഷൻ എല്ലാം എനിക്ക് കമ്മ്യൂണിക്കേറ്റ് ചെയ്യാൻ എളുപ്പമായിരിക്കും. അത് ചെയ്യാം. അതുകൂടാതെ ഇതിന്റെ റെക്കോർഡിങ്ങും നമ്മൾ ബ്രാൻഡ് ചെയ്യാൻ കൊടുത്തിട്ടുണ്ട്. UAE ചാപ്റ്റർ അത് ബ്രാൻഡ് ചെയ്തതിനു ശേഷം അത് യൂട്യൂബിൽ റൺ ചെയ്യാനുള്ള കാര്യങ്ങളും നമ്മൾ ചെയ്യുന്ന അറേഞ്ച്മെന്റും നമ്മൾ ചെയ്യുന്നു. That's it. Thanks for attending. See you next week.
Thank you all. Have a nice evening.
Bye.
Bye.
Thank you. Bye.
Bye.